Proposed changes by OSFI will make it more difficult for people looking to buy homes in Toronto's real estate market to qualify for a mortgage. My name is Paiam Roustaian from Bosley Real Estate. In today's weekly market update video, I will break down what this means for you. Stay tuned, let's get into it. Hello everyone, Paiam here from Bosley Real Estate, here to bring you another weekly market update video. Thank you so much for everyone who watched the previous weekly market update video and who supported me. I did pose a question to you on Instagram. What topics did you want to learn more about when it comes to Toronto real estate? Another big thank you to the people who did reach out to me with questions. We are going to make about 5 videos to address the questions that you had. But in the meantime, if you are one of those people who sent me a question, check your DMs because I reached out to you to respond to them so you don't have to wait for a content piece from me to get your answers. And now moving on to the topic of today's video, which is the proposed stress test changes that OSFI is proposing. Now, before we get into it, the question is, what is OSFI? So OSFI stands for the Office of the Superintendent of Financial Institutions. Now, I want to get the exact wording from their website as to what they are, but they are the independent government agency that regulates and supervises federally regulated financial institutions and pension plans to determine whether they are in sound financial conditions and meeting requirements. So they are essentially the independent government agency that regulates banks and pension plans. Currently, as it stands, if you are looking to buy a home and you need to take out a mortgage on it, uninsured mortgages need to qualify at a rate of 2% above the market rate or the Bank of Canada's 5-year rate, whichever is higher. And the reason why that is in place is to add what we call a margin of safety to ensure that borrowers can continue making mortgage payments in the chance that interest rates rise in the near future or that they have a dip in their income. The proposed change would take the need to qualify for a prime mortgage from the rate of 4.79% to about 5.2 or 5.25%. And keep in mind, this is to qualify for a mortgage. So let's imagine a scenario here. Let's say you and your household have an income of $100,000. You are looking to purchase a home in Toronto with 20% down at a rate of 1.78% and a 30-year amortization. Now, according to ratehub.ca, you would qualify for a home valued at about $651,000. Now, with the proposed changes, that same household at their same income levels in Toronto would qualify for a home worth about $618,000, which is about 5% less. So if you are a buyer currently in the market for a home, you would either need to have a bigger down payment or change your search criteria. The challenging part about that is home prices in the GTA are already rising year over year by well into the double digits. So for you to pause your search in order to save more money, it's very likely that the appreciation in the marketplace right now will outpace the rate at which you will be able to save for that additional down payment. One of the big intentions here is to help cool down today's market by curbing demand in this sense. The challenging thing about that kind of policy is that most buyers in today's market are going to be end users, which is very different than the big real estate bubble that we saw in 2016 and 2017, where a lot of that price growth that we saw in those 2 years were fueled by speculators. It's a very different case in today's market. Most of the price growth right now is fueled by end users. Ironically, this may have an adverse effect of boosting demand in the marketplace. What may come as a result of that is you have more buyers scrambling to purchase a home as well as secure their mortgage before that June 1st date so that they can qualify to borrow more money so they can purchase a home at a higher price. Another intention of this regulation change is to make sure that buyers who are purchasing homes at today's very low interest rates will be able to afford a rate increase in the near future. The funny thing about that is, when you think about it, the whole intention of the stress test is to make sure that buyers are protected in the event of a rate change. So increasing that stress test, it's a bit of a redundant policy because it's kind of already baked into the policy as it stands right now. OSFI will decide on May 24th whether or not these changes will be taking place, and they would be implemented in that scenario on June 1st. Though if they are proposing it, it's very likely that they are planning for the proposal to come into effect. The other question remains, what changes will the federal government make when they release their budget on Monday? In conclusion, there is a proposed plan in place to make it more difficult for buyers to qualify for a mortgage. Now, economists do not expect this to have a big impact on today's market prices, nor really break the market psychology that is in place that prices will continue to grow in the near future. If you are a buyer who is wondering how to navigate purchasing a home in today's Toronto real estate market, give me a call. My number is down below or somewhere on the screen here. Give me a call so we can book a strategy session. It is possible. It will take some strategy and planning though. Thank you so much. My name is Paiam Roustaian from Bosley Real Estate. This has been your weekly market update. Ciao.